the financial systems banks. Do you guys mind introducing yourself one by one, please?
Sure. I'm Rajat. I'm part of Mastercard's global blockchain team. For those of you who don't know what Mastercard does, essentially we're making it easy for customers to be able to access crypto and make the ecosystem more safe and secure.
Okay, this is Lucas. I'm from BingX. I'm currently leading the fiat business, which is for everyone to easy to use our cryptos. Yeah, thank you, everyone.
My name is Frederik. I'm the CEO of the Cardano Foundation, and we are a contributor to the world's largest DAO, managing about $1.2 billion and having 7 to 8 million inhabitants.
My name is Shehram Khattak. I'm General Counsel of Trust Wallet. Trust Wallet's a self-custody crypto wallet.
Very nice to meet you guys. We got some heavy hitters here. So I'm with Bitcoin.com. I'm the Chief Legal Officer of the company. All right, first question for you guys. So we look at stablecoin. One of the first major stablecoin, Tether, USDT, was created in 2014, right? So it's 11 years since we've seen the first stablecoin. Obviously, there's hundreds of billions of dollars worth of stablecoins. You got USDT, USDC, DAI, a lot of other types of algorithmic stablecoins. I think today the discussion is going to be focused on, pegged stablecoins, pegged to the dollars or other currencies. My question, so we're going on 11 years since the first major stablecoin, USDT, was kind of released to the public. How are we looking at institutional adoption, especially when we look at, for example, Mastercard, when we look at banks, financial institutions? To me, just looking at the landscape, we're seeing JP Morgan and other type of banks kind of adopting their own stablecoins, but we haven't really seen massive adoption, right, from banks. I'm curious to what you guys have to say on that.
Sure. So at Mastercard, we take it one step. I wouldn't call it further, but parallelly in a different direction, is that we look at fully fiat-backed stablecoins. So a stablecoin that isn't fully fiat-backed is not something that we as Mastercard interact with on our network, right? And with regulations coming out in different parts of the world, it becomes even more critical for us as an ecosystem player to enable that and make this easier for our customers. And when I say customers, I'm referring to both traditional banks which you were referring to, and also the crypto ecosystem players. Now, when we speak to banks and when we speak to the ecosystem players, which are more crypto native, the conversations are merging right now. It's not that everybody's speaking the same language. There's still a bit of a disconnect, but it's no longer the disconnect that you would see maybe 5 years ago, right? So we made progress. Where we're seeing the most traction today is cross-border, and I'm sure everybody on this panel will agree with me on that. Everybody likes to quote big numbers saying, transactions and stablecoins have surpassed this number, that number, but anybody who's actually in the ecosystem would tell you majority of it, 90% plus probably, is all liquidity management. And the rest 10% is spread across a number of use cases, the biggest of which we see as well and are we're enabling is cross-border trades when it comes to remittances, flows, SME payments, and things like that. And you are seeing banks take that up because they see how valuable that is. I will say one note before I pass it on to the rest of the group is, when most of the builders over here are thinking about stablecoins, do keep in mind that it's not about just adding stablecoin to increase complexity or because you want to add stablecoins and make it cooler, so to speak. It's about thinking where it really adds value. At least one of the legs should be contributing in terms of either speed or cost or whatever it is, right? One of the legs should be stablecoins, either its origination or delivery. I'll pass it on to the other members on the panel.
Lucas?
Okay, thank you. I think I almost totally agree with Rajat's point. Yeah, basically, the stable coins benefits the B2B business. It's mostly for the very huge amount of transaction between the institutions. Previously, I think it's kind of very slow and cost is high. But based on the blockchain, let's say, The stable coins is like near instant, and also it's like 24/7, and it's the cost, the gas fee is just a few gas fees. It's convenient, a lot of like institutionals. Besides, I think it's also partially resolved the issues of the FX. Like previously, like maybe like I need a euro, you only have USD. Like how? Like I need to convert. But if the amount is huge, it will cause some FX issues. Yeah, but for now, since the money can be almost instantly to me, I think it's partially fix those kind of issues. And also, all the transactions is transparent to all of the audience. Yeah, I think that's most benefit. I think the stable coins can bring the change to the institutional business.
Fred, so what do you think? Thank you so much, Fred. What do you think we're not seeing this massive adoption by all the banks for stable coins?
So back when Tether was founded, right, I had some very close contact to them sort of a year after, 2 years after, and what really struck me was that it came out of a very bespoke problem, which is basically payment rail arbitrage. They were constantly being blocked, and they had this experience of being debanked, and everything you touched with blockchain or crypto name, you were being debanked, or you were, came into extra compliance and so on. So the original use case was payment rail arbitrage, and I completely agree with my colleagues. 90% of what we see in stablecoins today are specific institutional investors, brokers, funds. It's basically institutional flows settling with each other because they can't touch the dollar rails. If they touch the dollar rails, you might get blocked, right? And we don't want that. We want to settle our liquidity needs straight away as fast as possible. And it's not because you are hiding anything, it's just because there's this chance that they don't understand it. Now, 10 years later, well, the banks still don't understand it, and they still put most of Bitcoin blockchain into high risk, right, just per defect, and therefore you see that stablecoins are continuously evolving. Now, all these nice use cases with remittances and stuff like that, that's just branding and PR to make the politicians happy, huh? Now, it would be great if some of that actually was working and you could observe that on chain, but that's not what we're seeing. So I actually think there's a really big need for the banks, to kind of up their game in the compliance departments and figure out how we actually do that. And I do think there's some really good forensic companies, some of them are present here, who is helping the banks today. And the other part is they're innovating with doing their own stablecoins. And they make sense for settlement. For instance, like 8 years ago, we did for a German insurance company, we call it a settlement coin. So it's a huge multinational corporate, and they were paying the banks, millions of dollars in banking fees to ensure that they had the P&L and the balance sheet aggregated as close to a weekly basis as possible. But instead of doing that, we created a settlement coin, right, and then they could save all these banking fees, right? So I think there's some other use cases which is really cool, but we haven't seen so much of that because, well, then you take money away from the banks. So I think some of this is really about understanding compliance and understanding that blockchain and crypto is not natively bad.
Thank you. Shehram?
Yeah, I mean, I think most of the points have been said already.
Do you want to put the mic?
I guess what I would add is I'm not sure that banks have fully figured out what's in it for them. So if you think about what a bank would have to do to implement stablecoin infrastructure, they'd have to deal with legacy IT systems, legacy operations, but not just from a ops perspective, like also processes. The entire departments would have to change how they function. And there's a time and cost element there. There's an education element there. All the ancillary functions would have to re-engage. So all the processes that have currently been implemented into a bank the size of a JP Morgan has had risk, compliance, legal, vetted all their processes. That would all have to start again. So I think the numbers, to be honest, aren't there for banking as an industry. Is there for one bank? Yeah, sure, they'd love to take it on. But for the entire industry to come on and say, okay, yeah, we're all going to now start custodying this stuff. And I think we're much further than we were, but we're not quite there yet.
Amazing.
I think what's quite interesting, if you look at it from the asset management side, right? I don't know how many is familiar with Franklin Templeton. I think they're what, third largest asset manager in the world, and they actually run 10 nodes. So they run the Ethereum, Bitcoin, Cardano, etc. They run 10 full nodes, right? And they've done the tokenization of the money market from the Benji, right, on 2 different chains, right? And they actually sort of calculated, I think it's 15-20% cost savings by running the client register like that. And if you come at it from an RWA perspective into a bank or a combined asset manager or bank like a UBS or something like that, I think then you actually see the case. But if you come at it from a remittances or like a payment rail, well, there is no case, right? Because it's a compliance question.
Absolutely, yeah. So it's a great... Sorry, go ahead.
Not to cut you off, but just to add to that as well, right? So when we speak about remittances, and it goes to the same aspect that a lot of the people, a majority of the population, still prefers to hold fiat money. They don't want to be holding stablecoins. Of course, in certain markets and geographies, they end up holding because of other factors such as inflation, political instability, whatever you have it. But a majority of the world population prefers holding it in fiat currency, and that's where they end up paying 3 to 5% in terms of converting it, right? Whilst there is USD liquidity available, when it comes to other currencies, it becomes more and more difficult. And depending on the currency you're in, I've heard people end up spending about 10%, and that really doesn't help stablecoins narrative or remittance narrative. Sorry, just to add to what you were saying.
Do you want to respond to that?
Yeah, I mean, let's look at global regulation for a second, right? So, I mean, you can love it or hate it, right? But I think the first iteration of the MiCA coming out of the European Parliament was really, really good. Now, the implementation was not so good, right? If you look at the Clarity and the Genius Act, I think, you know, that was actually some really, really good policy work. But for this really to work and sort of look into TradFi, why don't we allow people to share the earnings of the stablecoin, right? I mean, one thing is saying, yeah, we can do status quo, right? But actually saying, okay, normally if you have money in some economies, right, you will get an interest rate, right? But actually forcing the issuer to keep that interest rate and not giving that on to the consumers is actually sort of negatively, you know, harming the stablecoin environment, right? So I think there's a couple of things we could definitely also do from a regulatory perspective while still protecting consumers to make this much more attractive, and think about like financial engineering around this, right? To have a really strong product. Because I think there's a demand for a product like this, huh?
Absolutely. So we have 4 crypto native businesses, right? We got Trust Wallet, which is self-custodial wallet, like the Bitcoin.com wallet, get the Cardano Foundation, and then BingX. I think like the 4 of us were kind of used to be having crypto native banking issues, you know, like overnight you can have your bank account frozen because, you know, the new government doesn't like crypto of the country where you have a bank account. So obviously Mastercard doesn't have this problem. You know, you guys are one of the biggest payment provider in the world. What I've seen, and I'm sure the audience has seen that as well, you guys are on the like dozens of debit cards, if not hundreds of of crypto companies. And so basically, you know, the guy goes to the store, and at the point of sale, he's going to sell his stable coins for the payment to fiat. How, like, first of all, like, when did you guys started this business, and what was the impact on the business? Did you have to restructure on crypto? What was the impact on revenue, if you can talk about that? And then I'll go into the crypto native businesses.
Sure. There's going to be a few things to cover here. Whilst I cannot go in exact numbers because we never publish that, I can confirm that we've got hundreds, as you said, of cards with exchanges and in some cases self-custodied wallets as well that are live now. So you as customers could go to these VASPs and get a card and spend your crypto for something as simple as buying coffee, right? You don't have to worry about, you know, how the FX or conversions happen in the background, and the merchant who is accepting crypto doesn't even know they actually accepted crypto because they are being settled in the currency they prefer, which, by the way, could still be crypto. They could say, I want stable coins at the end of the day when I get my settlement, and we'll make that happen for them. It's been a long journey, of course, and I cannot take credit for it. I've been a part of Mastercard for 3 years. but this journey started in about 2017. So we've been in this space actively as an organization for about 7, 8 years now. We are one of the largest patent holders because patents are dear to payments in general. I think last time I checked, we were either top 3 or top 5 patent holders in blockchain in general. So it's been something that started off as an innovation. It was a small team just innovating and figuring out what we as Mastercard wanted to do. But then as it evolved, we understood the potential that it brings not just internally to us, but our partners and ecosystem players that we interact with. And today we have a team of 100+ people that look purely at developing products. And that's the organization that I sit in, right? So I look after something which is more traditional to Mastercard, which is around payments, acceptance, and things like that. AML, compliance. Whilst I'm no expert in any of these, I bring in the aspect of blockchain and crypto and ensure our teams understand that. By the way, that job's become a lot easier because our compliance folks now speak the same language as I do. So I soon might need to look for a different job, right? Or start doing something else within this space.
So quick follow-up question, then we'll go to you guys. How do you compare to Visa? Would you say you guys are more bullish on crypto than Visa?
I wouldn't comment on that. What I can definitely say is we have slightly different strategies, but all organizations are looking to innovate and make it easier. It's the route that we take, which might deviate, but eventually that's the industry in general, right? Not maybe you find 2 companies which might be doing the same thing, but when it comes to card networks, there aren't that many companies. So in general, you'll see a lot of overlaps, and in some cases, differentiation as well. So where you do see differentiation is things like multi-token network, which is something that we've built to make more complex crypto transactions. I say crypto as a catch-all because we're looking at from a perspective of tokenized bank deposits, CBDCs, stablecoins. Doesn't matter the currency you have, you can use it for things like buying real estate and ensuring atomic swaps happen within the trusted ecosystem of Mastercard. Then there's also something called as crypto credential, which essentially gives you an easy-to-use alias. You no longer need 5 or 6 different wallets that you have, depending on the chain that you have to maintain these. All you need is an alias, and in the background, that alias is matched to different wallet addresses. So things like that differentiate us from competition, and there are other things which both organizations are doing.
Lucas, so the 4 of us, crypto-native businesses, like what is the best use case of stablecoins for your company today? I just want to give the audience kind of a feel of like how do we use, for example, Bitcoin.com, it's all about yield, right? A lot of our treasuries in stables, put that in Morpho, Aave, Compound, earn some yield. How about you guys?
Yeah, I think as a crypto exchange, mostly all of the assets can be put a price as USDT or USDC, let's say stable coins. Yeah, but for most of the regular users, I think one for them is to just trade and win. But bring the trade to life is say like they want to spend the USDT or USDC or let's say stable coins during the daily life, just as Rajat said. I go to the coffee shop and buy a cup of coffee and buy like magazines, those kind of stuffs. Yeah, I think that's most user scenarios we see stable coins in life, and which is mostly relative to the traditional banking and also like payment scheme systems. Yeah, I operating a lot of like crypto-based debit cards. Yeah, but as I think as I still can recall, like although like for the user perspective, I spend the cryptos, I spend the USDT to buy a cup of coffee. But in the back end, what the crypto exchange do is we sell this USDT to either USD or like Euro. Then we need to do the settlement using the Mastercard network. Then we do the clearance with all of the merchants and also our users. So basically, it looks like crypto-based, but actually it's still fiat-based payment network things. So I think the one thing I want to say, like for the stablecoins, traditional banking cards, just as Rajat mentioned, the most attractive thing is we need to put everything as stablecoins based. In our perspective, we don't have to convert stablecoins to euro and USD anymore. Because for the users, they still need to pay the spread. They still need to pay the FX. Because for the merchant and for the Visa and Mastercard, they still use the euro as a settlement. So I think it will bring a lot of benefits to both our crypto exchanges and our end users. Yeah, that's a things I want to emphasize here. Yeah.
Thank you, Lucas. Fred, do you have any comment on how, how does Cardano, what's the best use case of stablecoins for Cardano? The foundation, sorry.
Yeah, so the use case I like the best on Cardano at the moment for stablecoins is actually agentic AIs. So it's basically being used for two things. It's being used for ensuring that when you have an agentic AI who sits with one corporate in the traditional industry, and you have one sitting with another corporate in another company, industry, and they have to speak together. If one has a lot more CPU power, you can basically do brute force attacks. So basically paying micropayments in stablecoins, MiCA compliant stablecoins, allows you to basically take away that asymmetry that might exist in a model who has more compute power. And then the other part is when you have these agentic AI systems, and this is called Masumi, when they basically do this, right, you need an incentive also if there's no purchase being made. So the fact that there is a database with a large language model who's available to give an answer, a compliant answer to a request, but a purchase is not being made, a transaction is still being made to incentivize that to happen. I think this is an amazing use case using stablecoins, which we will not be able to sort of do in the same way in the TradFi world, because it will require us to be on the exact same basically settlement network.
Thank you. John?
It's a difficult one for Trust Wallet to answer, I think, because of course we're agnostic when it comes to the asset. I think for us it's more a case of ensuring that we have the ability to service our users and enable what they want to do. And so stablecoins is the other side of any trade. And so in that respect,
for Trust Wallet, you get millions of active users. What's the, in terms of stablecoin, do they prefer USDT, USDC? Is there a preference for algorithmic stablecoins, or what's the deal here?
So I think the easy answer is it's a reflection of the market as a whole. So USDT is the main one. USDC is a close second. Algorithmic and other kind of interesting models are coming into play. They're probably ones that people are experimenting with. And we're seeing more and more in the DeFi space, of course. But principally, you have the majors.
Got it. Awesome. So next topic, I want to talk about the central banks and the CBDCs, so the digital euros, digital yuan, digital dollars. We're looking at the ECB, the European Central Bank, right now, lobbying really hard to adopt a digital euro, similar to the digital yuan, which obviously there's a lot of issues in terms of freedom with regards to having a government centralized back digital coin. Basically, they can shut down your bank account right away, like we've seen in Canada, the truckers with Trudeau. Now, we saw in the U.S. Efforts from the Biden administration, Senator Elizabeth Warren, she was all about CBDCs, and then that got shut down, right, by Trump. And I think they're either voted or they're trying to vote on legislation that would ban CBDCs forever. My question, when we look at central banks around the world, what is the view of central banks, in your opinion, for stablecoins? And do they think are they threatened by it? Is that something that they want to embrace because it's transparent, right? The blockchain is public, and it's something we've seen Tether, we've seen USDC freezing, addresses. Is that something they're scared of, or is that something they want to work with, the central banks?
So starting with CBDCs, right? in my previous role at Mastercard, I was speaking to central banks specifically looking at this topic. And there's two things that are consistent across all central banks, right? There's different motivations for central banks across the globe, but two things remain consistent. One is sovereignty concerns, and second is looking for use cases where CBDC could play a role. Now, there's a lot of pilot and innovation work happening, but if you think about it, we haven't really seen the one breakaway or breakout use case that's everybody said, yes, this makes sense. So central banks are still figuring out, I would say, what use cases CBDCs make a lot of sense. Every central bank has different motivations, but sovereignty remains consistent for all of them. When it comes to stablecoins, that's an interesting take, because what we're seeing and observing now is, yes, today, most of the stablecoins are US dollar denominated, but there's an increasing trend for hyper-fragmentation. Most countries are introducing frameworks where they want the treasuries to be in the local fiat currency. Take UAE, for example, where we are today, right? UAE-backed stablecoins, or AED-backed stablecoins rather, are what will be considered legal tender. Other currencies, no matter what it is, digital asset, needs to be converted before it can be used for payments. And this will continue across different jurisdictions because, again, it's all about sovereignty and central banks trying to ensure that their citizens are protected, right? And because of that, what will happen is that, and essentially this is because we've learned from our payments ecosystem, right? What will happen is this gives fraudsters an even bigger motivation to come in and take advantage or leverage the vulnerabilities. And that's why it'll be very important for organizations, much like Mastercard, to ensure that the ecosystem remains safe and compliant. So that I would say certainly we're going to see a lot of hyper fragmentation going forward within the next few years, I would say.
Lucas, what's your opinion on central digital currencies and central banks, and how whether they like stable coins or not?
From my personal perspective, I don't think CBDC can be called as stable coins. I think it's just let's say like tokenized fiat currency. Yeah, I came from China, but the Chinese government is restrict the cryptocurrency very much.
Yeah.
But actually, 5 or even 6 years ago, Chinese central bank already released the digital Chinese RMB. Yeah, I think it's used in a lot of regions in China, but we cannot call it as stable coins. It's not decentralized, and it's just fully controlled by the central bank. Yeah, I think for the short term, we can see the CBDC somehow with fix some gaps between the banking system and the crypto world, or say blockchain world, between the stable coins using the CBDC. But for long term, I think it's somehow still, let's say if every central bank of each governments, they released their own CBDC, the things just come to the same. I have the euro cash, I have the euro CBDC. There is just no benefit coming to that kind of situation. So yeah, from my perspective, yeah, I think the benefit for the CBDC is still is under control of the central bank by the government. But long term, I think still maybe still stable coins is a better solution, yeah, for the world.
Absolutely. Fred, do you think we're going to see the rise of CBDCs across the world, or the adoption of stable coins? Or do you think it's going to be a mix of both depending on the geos?
I don't really have a crystal ball, right? I think every single central bank I'm in contact with has a CBDC project going on, right? So I think, innovation in central banks is a good thing because, we certainly need that.
You're not concerned with privacy and the fact, they can kind of, the same way they can do it on the blockchain, but...
So if you look at, for instance, Switzerland, right? They actually did they call eCash 2.0. There's a great, everything is public source, open source, so you can basically take it and you can run with it, right? So basically it took physical money, right? And it made a digital version out of that with the highest level of encryption and privacy you possible can have. So it replaces physical cash, right? So that's what the Swiss National Bank wanted to do, right? So I think it really depends on where you are and what the scope are of these CBDCs. And I think, you know, a lot of these CBDCs are trying to solve different things. So we call it one thing, but in reality we're talking about multiple different types of use cases and explorations, from anything from banking the unbanked to getting more control over your population. And where you are on that axis really is in your backlog and the scope of your paper, what you're following. But I think the biggest concern I have is that most people don't really understand the difference between M1 and M2 money. And specifically, you know, what is the role of the central bank compared to the commercial banks, right? And think that the central bank is the money printer. But that's actually not true, right? That's actually coming from the commercial banks. Yeah. So the larger question is, I don't particularly like a situation where banks in plural no longer exist and every single country only have one bank. If that happens, I think we have a centralization risk, and I think it would be net negative for all of us. Huh? So I do think some decentralization, even in the sort of the TradFi area, and competition as well, by the way, right? And that you have choice as a consumer, I think this is very, very good. But if you had the option, for instance, to get an account directly with the central bank, why wouldn't you, right? And I think this is one of those things who can potentially change the banking landscape as we know it.
Sure, you were, you know, self-custodial, trust wallet, it's kind of like Bitcoin.com, so like you got to be on my side, right? Like no to CBDCs and yes to stablecoins. What do you think?
I guess my thought on this is,
do you want to put the mic?
Look, if the government wants to take control, they're going to take control, right? Like, if they want to shut your bank down, they can do that. This is probably making it a bit easier for them. At the same time, there's a lot of benefits that I can think of, right? In the same way that a government could control certain things, they could control it for the negative, they could control it for the positive. So there's that. Ultimately, the privacy argument is true, but you have the same problem across a whole host of government initiatives. ID cards. I think for me, this is more a political driver. There's some political drivers in the background. You know, originally a central bank would look at stablecoins in the same way as it looks at money in retail accounts, and I'm just not convinced they care. It's that whatever. A central bank doesn't care about my $10 in my account, frankly. But maybe the way in which American politics has had a geopolitical impact in the world, people are seeing, okay, central banks could have a different role in the next coming years. And so if you don't have a CBDC program and you're not experimenting, you might be missing a trick.
Thank you. So we've talked about a lot of great things on stablecoins. I just want to, we had 6 minutes left, so I want to talk about the risks, right? Obviously, there's a lot of risk involved. We're trusting those third parties that are supposedly holding the equivalent of what they had in digital. They're holding it, you know, through treasury bonds, gold, silver, cash, etc., stock. We've seen depegging. So basically, depegging is when that $1 stablecoin goes below $1. We've seen USDC going to, you know, so you want to say, or above, right? Which is not normal. So USDC, I think it was for 48 hours, but it went to like something like 85 cents, which is insane, right? Because of the market cap of and it's supposed to be a stable coin. So there's risk involved. We've seen, you know, liquidity crises with UST, right? So my question to you guys, and you guys can take it any order you want for the last 5 minutes. How do you hedge? How do you protect yourself against like a systemic risk? What are those risks? If you know them, please share. All right, I'm gonna start with Shehram.
Okay, I think regulation can play a part here. You can force the projects, the protocols, teams to have to verify their assets, have to park them with third-party custodians. Ultimately, it's very difficult to move away entirely from the trust angle. At some point in the chain, there is trust involved, because you don't have a government backstop like you do with fiat. I'd start there.
Got it. Fred?
Yeah, that's the way we're walking as well, right? So I think I said it earlier today, right? We took all of the financial transactions of the Cardano Foundation and we put it on the blockchain. Then we posted the P&L and the balance sheet, and then we asked the auditor to basically do the comparison and see if that matches the ERP system, right? And I think there is a need, or we always said in blockchain, trust but verify. But we somehow forgot the verify. So let's use the blockchain more to verify, and that will help everybody.
So how do you verify, vaults that are full of gold? You need a physical auditor that gets there, right? And I think it's kind of the issue with USDT, where now they have so many assets. It's like, and they move in price so much depending on the market. So like, how do you verify all those, all those stablecoin issuers if it's most of their assets are not on the blockchain?
So there's different ways you can do that depending on the regime you are working under, right? But if you look more specifically, I just want to anchor it somewhere, right?
Yes.
If you look into the European Union, they've been extremely clear and said, what is an asset-backed stablecoin, and what kind of assets are you allowed to have if it's an asset-backed stablecoin, right? Then they actually did capital restrictions, so how much has to be in a European bank, right? And then we have something called open banking, right, which basically force these banks to have APIs to basically have the ability to verify that. And then you use something great like Trust Wallet or something like that to anchor everything together, and then you have an accounting layer. And then you ask, people who has like credible trust out there, maybe Mastercard or like an auditor, to verify that, and you give them a little bit of money for that, because we're still in a positive interest rate environment, and you see how much money Tether is earning. So it's really not an issue for them to pay for third-party verification of those accounts. So I would say you just basically do what we've all been dreaming about doing. You use the strengths from blockchain and the strengths from digitalization, and you give everybody who is a stakeholder of the coin the ability to be an auditor themselves. And then how much you want to trust is really a question of the business model. If it's in billions, you might want to trust a lot. If it's your $10, maybe the name is okay. So I think we have the technical possibilities. It's just a question of, are we ready to do this? When I told my finance department that we are going to do that, they said, no way in life. Then everybody can see when we do a rebooking. So if I put it in the wrong booking center and then I do a rebooking, it looks like I'm a failure. And I'm like, well, every finance department does rebookings, right? It's like nobody is perfect here, right? And that just gives you another risk category, right? It's not negative that you have more rebookings, right? But the more we can get these things out in the public, the more we can take a view on that, right? And I think transparency. With transparency comes accountability.
Awesome, Lucas. So from a centralized exchange perspective, how do you look at risks for stablecoins holders?
From the CX perspective, I think for us, maybe mostly focus on the safety and risk control, especially like we need to protect the assets from our customers. We need to do a lot of things to prevent, when the depegging happens, we protect the assets from our customers. But for the general risk control things, I think the regulation helps. We need to regulation to keep those issuers who issued those stable coins. They have transparent the reserves and also like their finance status, and also we make sure no one is control the market to avoid those kind of systematic risks to us. And also we need to build up more robust and the systems to avoid the system bugs, the vulnerability, those kind of issues to cause unpacking and the stablecoin risks. I think that's mostly as a crypto exchange can do.
Got it.
30 seconds, right?
What's that?
30 seconds, right?
Yeah, you got it.
Got it. No pressure. You asked a very important question, right? How do you trust your money, right? Because you're putting money into these stablecoins. How do you trust a bank with your money is the question I would ask because you're placing trust in an entity. Now the question is, which entity do you feel more secured about? Because banking has been an institution for a while, it's a lot more regulated and a lot more sophisticated and mature, you somehow feel a little bit more comfortable with that. And that's why we at Mastercard take utmost care about the stablecoins we bring onto our network. So the stablecoins that customers can use for on the issuance side or on the settlement side, doesn't really matter, are those that are issued by certain organizations. And these would be fully fiat-backed, so those issued by Circle or by Paxos. To the extent that Mastercard is and this is publicly available information, right? So I'm not doing any revelations. We're a part of the global dollar network. All of these things go to show the fact that we, as an industry, collectively need to ensure that we're ensuring that everybody's money is safe and secure. I'll just say, in addition to systematic risk, because it's huge, it's central, the other big thing is counterparty risk. How do you ensure that the counterparty that you're interacting with is not a sanctioned entity, so to speak? Yeah. And that's where regulations and we as an ecosystem play a very big role in ensuring that everybody is safe.
Amazing. Guys, we're out of time. Thank you so much. Thank you for giving us your opinions on everything. Thank you.